Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. And also, TractorZoom delivering insights. That's a great place to see what's happening in the auction market with their product iron comps. They have about 500 different auction companies that send them information about what's going on, and they accumulate all that, and they put it into a nice, easy place for you to check and see what's going on there. So if you like that product and you decide you want to move forward with it, use Moving Iron at checkout, and you get yourself a discount. Chip is with Blue Roof Agri Marketing out of Morton, Illinois, and he's nice enough to come on once a week to talk about what is going on in the markets. And Chip, we've got, we had a wheat tour last week. We had a couple of corn tours are starting to kick up here. So before too long, there'll be 3 of those corn tours going on across the way. And it looks like a lot of people are hanging their hat on that 175 to 179 range as far as average yield goes. So I guess what are your thoughts with that, and what do you see happening out there?
Yeah, we've had some really choppy trade here, Casey, and part of it is outside markets, like you said. Part of it is just a general weariness, man. This market is worn out. We've had starting with the Brazil second crop corn, several months ago. We've been in a weather market for like 3 months now, it seems like, and these weather models they flip-flop every 6 hours, and the market is just worn out. And so, on the up days, on the down days, open interest, meaning the total number of contracts out there, seems to shrink. So we're just kind of losing interest in chopping people up. That's not all bad, right? Because the market's trying to fight out, all right, what's the demand going to be? What's the size of the crop going to be? The next 5 or 6 weeks weather is still going to matter in August and, maybe first week or 10 days of September, especially on the beans. So we're kind of transitioning, in my opinion, from here's what the supply is. You kind of nailed it. I think the market's thinking, are just maybe just a touch below trend line yields on corn, maybe at slightly below on beans, but that's still up in the air with August weather. But then you have to figure there's a lot of things going on in the world with the Brazil second crop corn situation, the drought down there. That crop's ending up way less than expected. Drought in Canada, drought in the Dakotas. There's dry weather in Russia. Their wheat crop is shrinking. And so the world stock situation for corn, beans, wheat is shrinking, and we're the only source for corn and beans for sure. And we're very competitive in wheat for the next 6 to 9 months. And so I think we continue with this sloppy trade, but big picture, I think we're kind of starting to develop, what should be a demand-led bull market as you go forward, particularly post-harvest and on into winter and early spring of next year.
Okay. So as you're looking at those outside markets, talk about Brazil for a little while and what's happening there. It seems like there are numerous reports that come out there that every day that they've lowered the estimated corn crop, and same with a little bit in Argentina, a little bit. You've seen that, but they've also had a pretty strong run in wheat. But I guess as you take a look at what's going on in Brazil, do you really think that there's much more there that could really overall affect the overall trade? That's going to be a big shock to anyone, or do you feel like it's going to have to be more wait and see what happens with our crop, and then throw that on top of what's going on in Brazil?
Well, I think the Brazil thing is still a work in progress, and it just continues to shrink, right? I mean, we had a firm, it was yesterday or day before, that came out and they were estimating the export situation in Brazil, and they came out with 17 million tons. That was 18 million tons below a year ago. And so put that in perspective, that's somewhere around 900 million bushels. It's a big deal. It's a big deal. And it's, they don't even know the final size of that crop. That's just an estimate at this point. Wouldn't surprise me if that doesn't shrink as you go forward. There's even been some talk that, it's possible they could actually import some corn from the United States into Brazil. So, I think that's still a dynamic, ongoing situation. It's very dry in Argentina. There, you've also got a port strike, not a port strike, a trucker strike in Argentina. They're having to offload, rail in beans and top off, barges and ships because it's so dry there. Their main river is like lowest on record, and so they can't load those ships as full as they would normally with higher water. And so the truckers have a little bit of leverage right now. So you got a trucker strike in Argentina. So dry weather there, that doesn't just get fixed overnight, right? Some of that flows in from Brazil, but point being, you've had some really erratic weather, weird weather in the southern hemisphere. And, as we go to harvest, they're going to start getting ready to plant. And it's less than ideal right now. The market's not talking about that yet. It's very rare you have a back-to-back weather problem in the southern hemisphere, but that's a possibility this year. This Brazilian situation has been really weird. So you got weather thrown in there. You've got drought in Canada. That's still ongoing. That makes a difference on the world feed grain situation. They raise oats up there. They raise spring wheat, a lot of different crops up there. They've already imported a little corn from us, which is a little bit odd. And so, this thing is shrinking up as far as the stocks. We're definitely on a downward swing in particularly feed grain stocks, wheat, corn, and other minor feed grains. And it's been a while since we've seen that. The world demand is still pretty strong. And, that's a good combination of being in. That's where you want to be positioned with the only country with those stocks when the rest of the world's hungry. So that's the way it looks like it's kind of shaping up here. It doesn't mean you can't go lower. But I think anything lower, maybe into harvest is going to be temporary, because when you have these weather situations, the drought in Brazil, drought in Canada, northern plains, it takes people, end users in particular, by surprise. And I don't think there's enough coverage in there. And so I think they're waiting. The demand hasn't been real great because I think they're waiting and hoping with bated breath that the market drops into harvest and they get a chance to buy some stuff at a cheaper level than where it's at today. They may or may not get their hope, but I think that's what's going to happen. And, the last 2 weeks now on Thursdays, our export sales have been pretty good on new crops. So you're at the stage in the calendar where that demand starts shifting back to us, and it's right on time, and it, just kind of is slowly building. We sold some beans this morning, 300,000 tons of beans unknown. So our demand's starting to pick up a little bit, and it almost, I think, eventually is going to kind of overwhelm even what the supply is, because I don't think we have north of a trend line yield in corn. I don't think that's possible given how dry it is. I think we'll struggle to be north of trend line in beans, but the next few weeks will still tell. So if we end up a little bit below trend line and this demand stays strong, it just tightens things up even further. And, I don't want to get too bulled up, but, I think there's way more upside risk than downside. and I think it's going to stay choppy, but I think the breaks will be bought, and you'll transition here over the next several weeks, from kind of this weather, supply market to a demand, just grind this thing, and we're the only game in town as far as exports go.
Right. All right, let's talk box beef here for a second. This is the well, it's been on a tear here the last 2-3 weeks is what we see with that, and cattle prices seem to be kind of rebounding there a little bit as well, right along with that box beef price. So when you take a look at that, Chip, and tell me what you make of that.
Yeah, so demand on the beef side is really good. Our exports have been hit or miss, but in general, our exports are going to be record. Demand's really, really good. Box beef has turned quite a bit higher. It's actually started to drag the cash market along with it. Cash was a buck or at least a buck higher there this week. It looks like maybe two in some areas. And so cattle on feed report from 2 weeks ago was pretty friendly. The drought in the West has caused, right at record cow liquidation and slaughter. So we're shrinking these numbers. The heat has brought this past summer has brought weights down. And so, I think on the beef side, the cattle side, things look pretty solid. Doesn't mean we'll go straight up, just like today. We were down pretty hard today. I think you're going to see those periods where it's kind of 2 steps forward, 1 steps back type of a thing in cattle. But I think things look pretty good out into winter and early spring, and things are tightening up. Demand's good. Box beef is starting to rally, and in my opinion, things look fairly good on the cattle side of the equation, although probably won't be straight up.
There.
Casey, you really garbled on me.
There you go. Can you hear me now, Chip?
Hear me. There we go. You're back.
Okay. All right. Sorry about that. All right.
No problem.
All right. So now let's talk about, jump back in here now. All right. I support prices in the same way. Cutouts took a big smack yesterday. You look at what happened there, and cash hogs climbed a little bit yesterday too. But there seems to be a back and forth there with the pork price, and you think a lot of that's driven by the scare of what's happening in the Dominican Republic as far as AFS goes.
I think it's not helping for sure. That's pretty close to home,
right?
And so. Hopefully it doesn't come here. But I think we're still have a little bit of PTSD as far as that announcement of African swine fever in the Dominican Republic. And I think some of this is calendar related too. We're here in the first week in August. You look at the last 30 years, and that's a lot of times about the peak in the cash hog market. You saw the cutout really implode yesterday. And so I think some of this is kind of seasonal calendar based selling. Now that the difference is, we're still struggling with some disease issues here of our own. I don't think we've straightened out the PRRS situation. You've got, the lean index sitting here about 112, and October hogs at a little over 87. So I don't know that there's a ton of downside in here, but at least from where we're at on the calendar and the cutout heading lower, and this ASF scare in Dominican Republic gives the market a good excuse to have sold this most recent rally. And again, I don't know that it's got a lot of legs, $10 to the downside necessarily, but for the time being, we're seeing some pressure. I think we got about 4 days left, I believe, on the August contract, which is sitting at 109.50 roughly, versus the lean index at, somewhere 112 or just south. So once the August gets off the board, let's just say you take a little bit off the lean index and it's sitting at 110. Well, you got October hogs sitting there with a, $20+ discount. So I think that will help support us a little bit, especially if this thing breaks a little further. But a lot of volatility there in the hogs recently. Limit up, limit down. I think that'll probably continue, unfortunately.
Yeah. A lot of crazy stuff going on right now. A lot of things, a lot of movement plan in place, Chip. So folks want to reach out to you and get more information about what you guys do at Blue Reef Agri Marketing. What's the best way to do that?
Yeah, best way is just call us at the office, 309-550-7213. We'd love to chat with you. You hit the nail on the head. Extremely important to have a plan and execute on that plan. And you can't use the volatility to your advantage if you don't have a plan and execute on it. So we'd love to chat with you.
Right on. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com, and you'll find all the entire library of the Moving Iron Podcast, as well as any blogs I have written will be posted there as well. Moving Iron Summit's coming up here in Nashville, Tennessee. That you have about, probably about a week to kind of make that decision if you want to come to that. And if you want to come to that, check that out on MovingIronLLC.com, and you'll be able to see agendas, speakers, hotel and meeting registration information, as well as all the different sponsors and stuff that will be part of that. So make sure you check that out. Get any questions about that, hit me up at Moving Iron Podcast, MovingIronPodcast.com, and I will get back to you with the information that you need. So with that, I'm Casey Seymour with Chip Nellinger. Let's go to iron, folks. Out.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to agmarkets.com.
Moving iron in the 21st century. Hard working